Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the April 3rd, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And in our Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices in the red. That's including the spot volatility index. That's got to make you say, something to think about. But you got the Dow down 383, S&P off 41, and the X 100 off 1.5%, 117 points. Russell's getting the kibosh out here, down 4%. Makes sense to me, at least. That's off 34 points. You got gold trading up $8, silver down 11 pennies, light sweet crude up $1.71. Natural gas is up 2 cents. Treasuries are up nearly a full point, 27.30 seconds out here. And that's where we're going to really begin the day. Tom wrote in earlier and was asking, hey, he was looking at the TBT and he was trying to apply the TD 9 count pattern. And his question was, is there, in essence, a valid TD 9 count? And the answer is no, not yet. And the reason is that so he does have the 9 count calculation correct. So has TBT made a TD9 count pattern? And the answer is yes. Is it the type of qualifying pattern that would identify the bottom? And the answer I would say is no. And the reason, Tom, is that the low, in this case here, we're taking a look at a low of a 9 count. The low must be on bars 8, 9, or this bar right now, which is the bar following 9. So only if the TBT were to make a lower low, that low is the low below the low of the 30th, would that give you the official count? Now, I will stop you in your tracks and say if you're trading the TBT, don't even worry about trying to come up with a 9 count or any other pattern that Stevie might teach you. And the reason is because I don't want you to get astray. If you're trading the TBT, then you really must be taking a look at the underlying instrument. And that, in essence, for us, is going to be the 30-year Treasury bond. And that is where you need your decisions made from. I will share with you, if you don't get access to the 30-year Treasury, if you don't pay for the data feed out there, that's cool. But don't trade TLT or TBT, because I don't understand where somebody could make their. No, I'm not saying Thomas, and I'm really just sharing this for everybody else out here. And that's really that we really need to understand what the signals are on the underlying instrument. If we take a look at signals on a double or a triple out there, it's just not going to work. You're just going to be trading with both hands tied behind your back, and I don't want to see anybody do that. As the example, right? We took a look at a 9 count pattern on the TBT. So that would say if we go take a look at the 30-year Treasury, we should see some kind of 9 count pattern out here up top. Do we? No. Today is going to be, maybe it's going to be bar number 5. We just need to see where the close is today. Bar number 5, Tom, price is trading above Stevie's green line out here. That green line tells us our price oscillator is above 0. If our price oscillator is above 0 and price is above Stevie's green line, it tells us we have a rising price oscillator above 0, and that's bullish. And that says that now would not be the time to go short the buy a TBT or anything else out here. Right now, the message on the daily time frame chart for bonds is that price wants to move higher. If you look at the weekly time frame chart here for bonds, what do we see? The weekly time frame chart here for bonds shows a TD9 count pattern. So here's your TD9 count top. Remember, when you get a topping pattern or a bottoming pattern, let's talk about the topping pattern. What sellers have the right to do and what they should do is push price down to support. And that's what took place after that TD9 count pattern formed out here, where support, well, one level of support is Stevie's green line. On a weekly basis, price tested and rejected that level. You can't bust them down, you try to go bust them up. So your weekly time frame for the 30-year Treasury is not saying to go short. That short signal came in several weeks ago. Price got down, tested, and rejected support. If we go take a look at a weekly time frame, I'm sorry, that was the weekly. If we go take a look at the monthly time frame for the 30-year out here, what signal is it providing us? Well, its signal is that we don't see any kind of topping pattern out here. Price is above Stevie's green line. So, Tom, here's what I would say to you. I mean, maybe on an intraday base, you're trading bonds, the upside, downside, that's a whole different scenario out here. But right now, it seemed like your email was, hey, you wanted to back up the truck because you found a TB9 count in the TBT, and you wanted to go ahead and take it. And Stevie's going to say, don't do it. Do not do it out there. Now, look, if you were an intraday trader, 30-minute time frame or something like that, then we'd look at some other elements out there. I mean, here's a 30-minute time frame chart. For the 30-year Treasury, do I really see anything out here? No, just running up into a resistance level. That would be normal. But support out here, 181.21, has held on any move lower. So until a level of support gets busted through, dangerous to go into TBT. So, Tom, I hope that helps you. I know you had some other questions involved, but I think I might have been able to answer everything better by taking a look at the most important thing, the underlying instrument and what it is doing. And speaking of underlying instruments out here, speaking about what the markets are doing, for me, the underlying instrument for the S&P is the ES Mini. For the NASDAQ, it's the NQ. For the Dow, it's the YM. Why would Stevie say that? Well, I'll tell you why. You go ahead and trade with 6.5 hours worth of information, and I'll trade against you with basically 23 hours worth of information with my patterns. If you use the 6.5 hours worth of information, you're going to get schnockered. It's not even a fair fight. So what are the markets doing right now? They simply are trading between support and resistance. And we know that by taking a look at the hourly time frame charts for the ES Mini, the NQ, and the Dow. Now, the Dow has been down and tested that support level, did it during the last half hour, 28.20. That's the number. Watch 28.20. If price closes below that, tells us we're headed lower. If you could get the Dow, a YM below 28.20, simultaneously with the NQ below its support level of 74.59.75 and the ES below 24.56.50, then you'd get the unanimous decision that price wants to move lower. That's just using the hourly time frame chart, using the TD9 counts, not just to identify tops and bottoms, but where is support and resistance. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at Treasury bonds during that first segment here. And the one other thing, Tom, that I'd point out to you that's really important for anybody trading Treasury bonds, you need to really understand how this instrument is trading in relationship to the major currencies out here. And what you may not have known is that you've got T-bond futures at all-time highs again inside the euro. So in order to take a trade in TBT, you need to see sellers. You don't need to just see sellers in the U.S., you need to see sellers in Europe, sellers in Japan, Asia, sellers in Europe again in the UK. Taking a look at major currencies out here, and when we look at this chart, do we see that? And the answer is no, we don't see that. So unless we've got some real topping pattern that is out there, taking a short trade here would be a very dangerous thing to do. You've got buyers in all these currencies, not sellers out there. So let's go to our next question, which was coming in from John in Sarasota. And John wanted to take a look at the XLK and just wanted our take on the XLK. So the XLK's got a nice bottoming pattern out here, a couple of them. It's got wave number 7. That's letter G. That's on my screen out here, part of the Chapman wave series, used differently than the way that Basel does. If we take a look at price was moving lower, doing less relative energy, we had that three-river Morningstar as price had gapped up and closed above Stevie's red line. That gave us the buy signal out here. And then what price did with regard to the XLK is it ran from that level of resistance, Stevie's red line, to the next level of resistance. And that was the bottom of its daily profile. And that's in the 82.82 level. So right now, John, price is trading between resistance. We know it's 82.82. We're looking at it. Look at it on our chart. We see exactly where price stopped. It's a tool that we use to understand where support and resistance is, or where maybe old support becomes resistance. That's what we have here right now. The next level of support inside the XLK is about 75.93. As long as price stays above 75.93, then there is your range for the XLK. Now, would you enter a long trade now for the XLK? Well, let's go take a look at what its market breadth is. Just so happens that with the XLK, you and I can go take a look at its market breadth for 4 different time frames. Those 4 different time frames, let's get over here to the ETFs. Oh, I could have done it a different way. We'll just do it this way because we're here. Where's the XLK? It is right here in the bottom row. It is the second from the right or third from the left. XLK. Here we can see the weekly, the daily, the 240, and the 60-minute time frame, and we see that all of those signals are in the red zone. The red zone tells us we have bearish crossovers out here. So would I go ahead and take that trade right now to go long, John? I wouldn't. But I would be watching Stevie's red line. That is for sure out there. That could be your entry. But the XLK, to summarize it, much like the markets, now there are many other instruments out here. They've all got those bottom signals, but many of them have run into resistance levels out there. Thanks for writing in. Hope that helps you out. Hector and the fuel injectors wants to take a look at the SMH. And so let's go take a look at the SMHs, see what signals they're providing us. Unfortunately, for the SMHs, I don't have the ability to take a look at the TAS market breadth out there. But here's what we do know. Inside the SMHs forms a nice 9-count bottom, forms a nice Rhodes momentum indicator bottom. Seems like a broken record here. Price makes it up to a level I don't know if that's if it's a clear resistance level or not. What price did yesterday was it came back and it tested Stevie's red line, which currently is priced at 109.75. It tested and rejected that level. It's still above it. I don't think we're in. Your question is, do you back up the truck here? No, we're not in a back your truck up mode. I think, Hector, and I apologize to you and everybody else out there. Perhaps I have not made myself clear. So I want to make myself clear. I want to make myself gigantically clear. Okay? So let's start with the very first thing. The very first thing, let's come back here and just take a look at, let's see, where are we going to take a look at? The markets, right? Because there's a lot of discussion about the way that we came off the low, which was a nice way. The way that we came off the low was a V-shaped bottom pattern that we're in. Now, I answered this question several days ago, but I can definitively tell you as of yesterday, the absolute answer is no. Not no. The absolute answer is no. So we're not in a back your truck up kind of a market out here. If anything, and hopefully it works out this way, that about 3 weeks from now, 3 weeks to 4 weeks to 5 weeks from now, we see these markets making lower lows. I know you don't want to hear that out there. But if we do, then that's going to lead us to the back your truck up market. The one that we're in right now, all that we've really had is a counter trend rally. How can you say that, Steve-O? Well, I guess there's just a lot of reasons to be able to say that. The evidence is there. The one piece of evidence that I'm going to share it with you because I've shared it with subscribers out there, but you know me to be, hopefully know me to be an honest individual out here and give you the best that I have. And if I see something that changes the marketplace to suggest otherwise, we'll come right back and say, you know, we've got a new piece of information. But we don't have that new piece of information as we speak right now. And so there was a question, hey, the NQ, do I see the NQ holding, continuing to move higher out here? What I don't have inside the NQ is a reason at this stage here to suggest that one should jump on the short train. The only way I could get that signal would be price closing below Stevie's red line. That red line has been tested, you can see in the NQ several times, 1, 2, 3 times out there. Yesterday being that third time. 73.61-ish is the number that we're taking a look at right now. So as long as price remains above this level, if you're asking me, can the markets move higher? The answer is yeah. Absolutely. In fact, ideally, folks, the ideal pattern that Stevie would love to see take place out here, I'd love to see an A to B equals CD pattern unfold to the upside. The type that takes us in the NQ up to 87.42, maybe even 91.13. Although I don't want to really go for that stretch at this stage here to set up what? To set up the Gartley buy. That would be wonderful to see this pattern here unfold over the course of the next few days. Will that change my opinion that we go still lower? not a chance. In fact, this would be the better pattern, because then we could get some type of sell pattern, some type of a sell signal out here, being that Gartley sell pattern. And then the markets move lower towards the end of April into early May, and then they form that back up your truck type of a pattern out there. And that's the way that I'm viewing the markets right now. And not until there's some new piece of information that we receive will I change that. Okay, so I hope that helps you out regarding SMH, Hector. We've got a question here coming in from Paul. Paul says, explain how the market is down and the VIX is down. Well, it just is. First, the VIX, I guess the easiest way to answer that question is go take a look at the spot volatility index along with all of its future contracts. So where do I have that? It's not VIX primary. It's the one that says VIX symbols. Here we go, VIX symbols. There we go. Just couldn't even find the tab. Paul, here's the first thing that I want you to see. That we're in basically a terrible backwardation mode. Spot VIX index right now, 49.38. The December contract for the spot volatility index, 31.32. So it's got to get realigned. And right now, there's just a realignment that's going on in place. Steve Rhodes with TFNN. We'll come back. We'll take a look at the VIX. I want to give Paul an idea for where it's headed to. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Paul, the VIX, the current cash spot VIX index right now, it's just totally out of alignment with regard to all of its forward futures contracts. Those are listed down below. I've got April, May, June, July, August, September, October, November, December out here. And so this is really helping us to understand that it's a short-term event that we're dealing with at this stage of the game. Now, that spot volatility index, Paul, is likely targeting the 43.36 level. 43.36 is its 50-day exponential moving average. The reason why I say that is typically when the spot volatility index goes outside the 50 to 1, not the normal 20 to 2 Bollinger Band reading that I think is the standard default setting out here. When the spot volatility index goes above it, and then we start to see price close below the top of that upper Bollinger Band, that's a signal that price wants to move down to its next level of support. The next level of support would be that 50-day exponential moving average, 43.36. So regardless of what the markets are doing, that's what the spot volatility index's intention is as we speak right now. If price is able to get close below 43.37, that's when we would then begin to see the markets begin to take off topside. Maybe go ahead and complete that or form that A to B equals CD pattern that we drew inside the NQ. We'll have to take a look at that when we get there. I know somebody could say, "Man, Steve-O, why do you use that 50-day exponential moving average?" I mean, 50. You're saying, Steve, that if the spot volatility index starts trading below 43.37. $40 out there in price out there, 40, that you then think that the market is bullish? Absolutely. It has nothing to do with the number. It has to do with the relationship of where is it trading in relationship to that 50-day exponential moving average. And here is the proof that's in the pudding, really, because generally speaking, here, these little rectangles, squares, boxes, whatever shape it is I needed to draw the time period where the spot volatility was above the 50 or below the 50 and what the market was doing, this just simply shows it to you visually. That's all that this is. Trust that. Trust that. It is a great tool out there, that spot volatility. So, Paul, even though it wasn't the exact question that you were asking, I did try to give you the best answer that I possibly could in a way that you would also be able to use that spot volatility index out there. Jeff writes, and Jeff, I'm going to have to read. This is fairly long out there. So it looks like I'll look at that during the break, which doesn't happen for about 5 minutes or so. And then if it's appropriate, I'll go ahead and answer on air, and if not, I'll just respond back to you by email. But I believe that takes care of all of the questions, although if there was something inside the den, if somebody was asking me for something, would you be kind enough just to retype that in, and then I will get right to it. So we got the markets here, a little bit of a further leg to the downside, so let's go see where they're trading right now in relationship to support or resistance. If a level of support gets broken, we got to go try to figure out where's that next level of support. And right now, on this 30-minute time frame, price really just trading right into the support area. 24.56.50 on the ES, 74.59.75 inside of the NQ out there. The question is the Russell below Stevie's red line? Let's go take a look at it. And are you asking about the Russell 2000 cash indice or the Russell 2000 futures contract? So I don't know the answer to that, but it might be posted here. Let me go right to the cash indice out here, the Russell 2000. Let's go ahead and pull that up on our screen because most everybody has access to what this indice is doing, whereas you may not have access to it for the equity futures contract. And the answer is no, it is not just yet. It is trading right into it. So we can see that it's still slightly above it. See on my chart out here, Duffy, the black box is slightly above the red box. So it is still above Stevie's OUL oscillator and change line, the red line out there. It looks like about 1032 is the number. We're trading at 1037 right now. So close below 1032, the Russell would be signaling that it's preparing to head back to the lows of last Monday out there. That would be its signal if, in fact, it could do that. However, before price gets down there, before price gets down there, Duff, where the Russell 2000 equity futures contract might find resistance would be at about 974.81, give or take out there. So that's a potential level of support. If we look at all four of these daily equity futures contracts, we can see prices below the top of their boxes, so that is resistance. So everything is below resistance. 2540 is the number inside the ES, 7759 in the NQ, 21047 inside the Dow, and 110636 inside the Russell 2000 equity futures contract. You can see some of my trend lines out here. The NQ at this stage here just really testing its upper trend line level. So it'll be interesting to see if in fact this support area on that hourly time frame chart, and we won't know until we get to the 2 p.m. time frame. Looking at it 136, which we just did, isn't going to be as important as looking at it when we get to the 2 o'clock time frame out there. So no other questions that I see at this stage of the game. So what else do we want to look at out here? Just looking through some of my panels out here, I really don't see any. I don't really know where to go. It's Friday afternoon. It's kind of the end of the week, if you know what I mean. And the question is, so where else is that I can take you where I'm going to be able to provide some kind of valuable information out here? Boy, oh boy, 2 minutes. Can I go over volume for the day? Yeah, we can go do that. Thank you, RY. And take a look at volume for the day. Let's go look at the index ETF volumes. I suppose that's what you were looking at. Yeah, we can go take a look at the GDX. So here's what we know. Let's just expand this out. Let's take a little bit of time. Let's walk through this. Let's look at the SPY out here. So what do we know about volume inside of the SPY? We know that the last time that price was pushing down was just a couple of days ago. And that was on April Fool's Day. And as price was pushing lower, it was doing it with 189 million shares. We're now effectively 4 hours into the trading session. Is that right? 9:30 to 1:30? Yeah, 4 hours. And the volume is 73 million. So if I divide 73 by 4, let's just say I make it 80 million, that'd be 20. And 20 times 6 would give me to 120, so maybe 130 million shares versus 189 as we speak right now. Price is pushing lower on lighter volume out there with regard to the SPY. Of course, it's going to be an end-of-day number that we'd look at, but as of 137, we can make that statement, and it is accurate. If we go take a look at the Qs, do the same thing out here. The last time that the Qs were pushing down, the volume that it was pushing down with this as well, that was actually yesterday. Yesterday, it pushed lower, and it pushed, I don't know if it pushed higher or not, but it certainly pushed lower. It made a slightly lower low, 8.2 million. We're looking at the diamonds. I might have said the Qs, the diamonds, 3.5 million. So also pushing lower with light volume out there. That's what I see when I take a look at the diamonds. Now let's go take a look at the Qs out here and see what it is doing. Its volume push was a couple of days ago, April Fool's Day. That volume push to the downside inside the Qs was 53 million. You're at 29 right now. So across the board, RY, everything pushing lower with lighter volume as we speak. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's down 532, S&P 62 points right now. Mike in Niagara Falls wants to take a look at the ETF Jets, the New York Jets out here. And his question is basically a downside projection. So to give you that downside projection, let's start with the quarterly. Not enough trading action out here for me to give you a quarterly target, and not enough on the monthly, so that's a bummer. And on the weekly, what do we have out here? Boy, Mike, this is a toughie. This is a toughie. So let me get rid of these charts and come back to the 3 ETFs. That's going to be a little bit easier for me to look at this stage here. It's basically there's no tools that I have where I can come up with a price projection for you to the downside. We're at, in essence, price is pretty much close to trading at new all-time lows. It's not back to last Monday's low, but it's pretty close. So the only real tool then that I can think of, Mike, would be, and this is the monthly time frame. I'll just still use the monthly time frame. Let's go use it. The tool is going to be a Fibonacci expansion tool. And the expansion that I would be looking at, Mike, is from the trading month of August in 2015 all the way to the high out here, its all-time high, which was in January of 2018. And the 1.272 expansion is $9.92 out there. So that would be the next level that I would be looking at for where ticker symbol JETS would trade down to. If it does not find support there, well, then the 1.618 retracement level is at about $3.17. So at this stage, based on the information I have available to me, that would be the best tool that I could come up with at this stage of the game to give you some type of feel, Mike, as to where JETS is headed to. Michael P. wants to take a look at, can we take a look at gold and Gilead? So let's go take a look at Gilead, and we'll do both. We looked at this yesterday. Oops, gee, I got to type in the right ticker symbol out here. And Gilead Sciences, we had somebody that had called in and was asking, should they sell? We said, no, we didn't see it in any of the chart patterns. And today, and I'm glad we did that, today price is trading above one of the resistance levels that we had provided, which was 70. folks, sorry about that. A definite technical difficulty, but we're back up and running. Stevie, perseverance, Rhodes. That's what it's all about. So we were talking about Gilead. I don't know where I was in the conversation when we disconnected. But with regard to Gilead, the one thing we wanted to do, so we know that it's trading above. We know that price is trading above the top of its daily profile out here. Let's see if I can. Yeah, you can skip the break if you want. No problem. So where Gilead is likely targeting its next stop is likely 84.73. That's its breakdown level. So, folks, we normally do a break here at 150. We're not going to do that. And because I was knocked off the air, so we'll just keep running through that level. So Mike was asking about Gilead and gold. And on gold, I don't know if it was the ticker symbol gold or gold itself. But in this case here, with regard to Gilead, it looks like it's set at 84.73. That's its TD 9-count breakdown level. Now, I don't know if it was gold, the ticker symbol, which would be Barrick Gold. If it is, let me see if I can populate that out here. And so with regard to Barrick Gold, right now it's trading above, if you were asking about this, Mike, it's trading above a really key level of resistance. So watch this at day's end. That's 1989. You're trading at about $20.17 right now. And if price can close above 1989, price should make a run for the 2204 level. Now, 1989 is its weekly TD 9-count breakdown level. If I come take a look at the daily time frame, it's got some resistance out here. We're referring to Barrick Gold. Its next level of resistance would be up at the 2183 level. That is the top of its daily profile. With regard to gold itself, if we take a look at gold, the metal, let's first begin by taking a look at gold, see how it's trading in relationship to all of its other currencies out here. We're higher today in terms of dollars. We're higher in terms of euros. We're higher in terms of pounds. We're higher in terms of yen. So what this says is gold wants to continue to move higher. And move higher to where is the question, right? So the easiest where, I believe, inside of gold is taking a look at the real trading range that it's trading within. And that's with regard to its weekly horizontal trading range boundaries. So the range on gold, which is fairly substantial, is between 1494 and 1695 out here. So with gold trading higher in all the currencies, I would suspect that gold's going to go ahead and make another run for the 1695 area, Mike. That's what it looks like when I take a look at, all the charts put together for Goldilocks. So hopefully that covers everything that you had wanted. I see some other requests in here. There's a request from, let's see here, from thoughts on UCO, short-term position, potentially Jared. So UCO or USO, meaning that Jared is considering going long or short. Either one will work for him. Let's go take a look at light sweet crude. Give me a moment here to switch over to there's some other charts. And let's see where light sweet, let's pull this up here. So light sweet crude, we're looking at the May contract. And so this is really kind of interesting. Folks, remember when we were together yesterday? So here, I'm going to, Mike, if you're asking me, would I be long or short light sweet crude, the charts are saying you would be long light sweet crude. So let me explain the reason why at this stage of the game. Yesterday when we were chatting, there was a profile that had been in place for light sweet crude. And what we saw light sweet crude do yesterday was get up and test a key level of resistance. That happened to be the center of its box, 26.99. Price closed out the day at 25.32. So we know a level of resistance had held. Now, price is still in that zone, but that profile has gone away. Much like the weekly profiles that you and I have looked at with regard to the ES-Mini, the NQ, the Dow out there, they have new profiles that formed above price. And as I've shared with you, that is bearish. It means that price can bounce up or should bounce up perhaps to the bottom of those weekly profiles. Well, guess what has occurred today? What's occurred today is we have a brand new profile that formed in light sweet crude, and it is below price. And as long as price stays above 22.52, this says that it wants to run higher. So that's what its intent is. The higher for me would be the gap. I would think that if light sweet crude is going to make a move over time, that where it's headed to is the 41.29 area. So that's what's occurred today. That's important with regard to light sweet crude. Support 22.52. So you've got a fairly large range out here. I don't know if it's worth the reward risk. You've got to make that decision. If you were to ask me for another level of support other than 22.52, for example, what's Stevie's red line? Well, it's even below that level. That's about the 20.08-ish range out here. So it does. I don't see the signal here to tell you to take a short in light sweet crude. And it looks like it actually wants to continue to run higher. So, Jared, I hope that helps you out, at least taking a look at light sweet crude and the tools that Stevie uses to do that. Kay writes in, and Kay wants to take a look at Apple. So let's get Apple's charts up on our screen, see what they are doing. Let's go take a look at our 3 different time frames out here, see if price is above or below support, below the support level on the daily, the weekly, and above support, which would really be the top of its profile on the monthly time frame. So let's go take a look at Apple. Had that nice hammer candle back here. Look at that. Almost created an island bottom, but it didn't. But, a hammer candle tells you that price is trying to hammer out a bottom. Okay, we're about to go off air here. Apple. You don't want to be long Apple right now unless it closes back above 244.99. It's testing Stevie's red line. 2 closes below says we head lower. Hey, folks, thanks so much for being here. Sorry about that internet issue. Have a fantastic weekend. I'll look forward to seeing you on Magical Monday. Take care, folks.